Bob just also application for National Small Business.
Wow. There's no way you can go.
All right, why don't we go ahead and get going. So, wanted to welcome everybody. Good morning. Thank you all for being here on this rainy Friday. This is the first of our four-part education series for HHA. Want to give a quick shout out, thanks for our board members who are here this morning. Thanks to Amaji for hosting us. Our next one is September 30th, which will be PR and marketing. That'll be at the ION. Certainly encourage everybody to try to make that as well. So for those who don't know, who haven't been here, my name is Jonathan Horowitz. I'm the president of Houston Hospitality Alliance. HHA is Houston's Hospitality Business Association. It is a fully independent 501c6 membership-based association that represents and advocates for and connects all elements of the Houston hospitality industry. So that includes restaurants and hotels and venues and attractions and museums and theaters and anything that is related to hospitality in Houston. We also have more great events coming up later this year, and as we get into next year. We're working on the programming right now. There will be a lot of really interesting and fun events for everybody next year. So without further ado, I want to take the opportunity to first thank all of our panelists for being here. And as I mentioned to them, we will be recording this, so this will be the first in our library of educational events that will live on our website and be a resource for all of those in the hospitality industry going forward. So I'm going to start with Jennifer Dale from Lift Fund here in Houston. She's the Senior Vice President of Lending. She's got a rich background in entrepreneurship, small business management, and volunteer work. She's got a passion for providing opportunities for all individuals involved with Lift Fund. In her role, she leverages her strategic mindset and innovative spirit to enhance processes and meet the evolving needs of small business owners across Lift Fund's network. And she'll tell us in a minute a little bit more about what Lift Fund does. Second, Mark Winchester. He is the District Director of the Houston District of the Office of U.S. Small Business Administration. And I also would say that in his bio, he wins the award for the most acronyms of all of the things in his bio. He's got more than 20 years of federal service and experience with economic development. His current duties include supervising district staff and assisting the district director in overseeing the delivery of SBA programs and services in the 32 counties served by the district. Last year, this included providing over $1.2 billion in loan guarantees for small businesses. Before joining the SBA, he was at the University of Texas, Rio Grande Valley for 8 years, and he also worked for the state of Connecticut, Attorney General's Office, and the U.S. Navy Submarine Force. Wow. Mark, are you a Yankee like I? Am a Yankee?
You know what? I was born in Boston. So
I was born in Boston. All right, we got a lot to talk about. Next, Jada Harris is the chapter president of SCORE Houston, a national nonprofit that provides free mentoring, workshops, and other resources to the small business community. As the second largest chapter in the small business ecosystem, SCORE Houston collaborates with resource partners to ensure their clients' success. Jada is also the CEO and founder of Harrison Company, LLC, a contract management firm located in West Houston with over 25 years of contract management and accounting experience. She serves the small business community by providing effective business services and business training for her clients. Her company assists small businesses in building infrastructure within their businesses to support government contracts and their own internal accounting needs. Finally, Kerwin Eskai. Kerwin is a seasoned private wealth advisor, certified financial planner with over 2 decades of experience in the field. He has expertise in client acquisition, marketing, sales, strategic thinking, process improvement, and business management. He started at Ameriprise Financial in 1998, where he single-handedly launched and grew one of the largest financial practices in the greater Houston area. In 2021, he started his own firm, KNJ Wealth Management Group. During his career, Kerwin has had the opportunity to work on a variety of complex strategies with business owners and clients in numerous unique situations. In addition, Kerwin is no stranger to the hospitality industry. Among other things, having hosted and produced one of the largest events ever in Trinidad and Tobago, the Miss Universe pageant. Yes. Hospitality guy at heart. And finally, I get to introduce our moderator for the morning. Bob Charlet, right here, is the market president and publisher of the Houston Business Journal. As you probably know, the HBJ is a premier publication covering the business community in Houston. It has been around Houston for a long, long time. So has Bob. Bob has worked in the publishing. Bob has worked in the publishing business for 28 years. He's a native of New Orleans and a massive LSU fan. Bob has spent 17 years in publishing management in Louisiana, 10 of which with the Times Picayune. Oscar knows. He spent 7 years in Los Angeles with global publishing company Canon Communications and 7 years with Pacific Business News based in Honolulu, Hawaii, which I'm sure was really rough. He is also a fantastic golfer and a world-class world traveler. Welcome, Bob. Thank you for being here. I'm going to turn it over to you and the panel, and let's get started.
Thank you so much, Jonathan. Can you hear me? First, I'm going to make a complaint. I was promised that this would be bald guys only on the panel, so I'm going to ask you to leave at this point. No. Jonathan, thank you very much for the invite and all the great work you are doing, and hopefully, if you're following the Hospitality Alliance, they're doing great things, and this is an example of that, the learning. And guys, for you out there, and I'm going to throw a curveball at you because there's not a lot of you, I'm going to ask each of you to introduce yourselves so we can gear this conversation towards you and you get the most out of it. Now, we've got about an hour, maybe 45 minutes, and we'd love it if it was as interactive as possible. So what I sort of said to these guys is, yes, we'll hear from them and hear from their businesses and talk a little bit about kind of lending and in a disruptive time, but better would be if you've got questions, fire them away. Okay, so hopefully you get the most out of today. Other than that, what I asked each of our panels to do is if you could just do a little sort of state of, talk about your world and how do you see the lending market, how do you see your business right now. I'm going to ask Mark to start because we have a lot in common. The Journal has been a proud partner with the SBA for many, many years and partner on events. We publish a lot about the SBA, but folks don't know a lot about the connection of the SBA to like UH and SCORE and the SBDC, where I'm on the advisory board. And the winner of all of that is small businesses, because the resource that exists in Houston for a small business today is just unbelievable, and I don't think enough businesses know about it. So would you kick us off and sort of talk, and Mark is new-ish to the position, no big shoes to fill from Tim Jeffcoat, but
Correct.
maybe you could tell us about that too.
Sure. First I need to say thank you to the Houston Hospitality Alliance and Jonathan and your team. The work that you're doing, the reach that you're having early on, and then also holding this event. Also, thank you to Amity Bank for hosting, also for Bob Charlet for moderating, and he's correct. I've been here, Jonathan, you were talking about the time for Bob. I think Bob and I, it's been about the same time. So if he's been around here a while, I've been here around a while, And Bob is correct, the synergy, the collaboration, between HBJ, SBA, and our partners, you can't say much more about it than what it already is, and we're very grateful. And so now, Bob, I'll jump into the question. There are really four things that I want to address. First is capital, and I do want to share this, Bob. In the last 4 years, the number of units to the African American community has increased by 100%. Number of units for the Hispanic community has increased by 100%. Asian community has actually increased by 7%. I will also share this, in the last 4 years, the number of units for SBA loan guarantees has gone from 1,000 to over 1,300. We've seen a 35% increase in the access of capital loan guarantees here in Houston. Bob, I also wanted to share with the audience just some highlights, some major changes to access to capital for SBA. Number one, we have, this is for businesses with baby boomers retiring. There's acquiring businesses through acquisition, and we've made changes to SBA 7A acquisition financing. Now you no longer have to have 100% ownership. You can have less than 100% ownership and utilize the 7A. And I showed this to you, Bob, regarding acquisition for the 7A, and that is, if there's owner financing, a minimum of 10%, the borrower can have 0% injection into the project. So one of the major changes last August to SBA access to capital in 7A is the acquisition financing, and no longer can have as low as 0% equity injection, and you can finance less than 100%. Another major change to the access to capital, Bob, for SBA and the 7A program is reducing the collateral requirement for loans of $50,000 and less, and then also making it easier for borrowers who are applying for $150,000 less. So that was another major change, reducing the collateral requirements of loans of less than $50,000, and also expediting the process for loans of $150,000 and less. Also, for entrepreneurial development, one of the major changes for SBA, Bob, was a Community Navigator. Community Navigator for SBA focused on reaching markets where it typically wasn't reaching, and that is the underserved community. And so one of the major changes in entrepreneurial development and technical assistance was working with, we had over 421 organizations through the Community Navigator, including local organizations, Houston area, Urban League. Bob, for government contracting, and this is the right time, and I want to share this with the audience. SBA has 4 legacy programs. It has the 8A program, Hub Zone program, Women-Owned Small Business, and 2 years ago, Bob, we took over the Veteran Small Business Certification. I want to let you know, we're already in September. I would say approximately in a week or two, mid-September, we're going to have one platform, Bob, and it's called the Uniform Certification Platform. Uniform Certification Platform. So if a business is interested in federal contracting and wants to apply for any or all of the 4 certifications, there will now be only one application for that process. Another thing that I wanted to highlight on government contracting, Bob, is that businesses may not be aware, SBA, the goaling for SDB, Small Disadvantaged Business, has increased to 15%. 15% of all federal contracts going to small disadvantaged businesses. And to put that in context, on an annual basis, the federal government spends $750 billion, not $1 billion, $750 billion annually, and right here in Houston, $2 billion last year in federal contracting. One last thing, Bob, just want to highlight advocacy. Businesses need to be aware that there's an advocate for you, and there's advocate for small business when it comes to legislation that may impact their business. Those are the 4 things that I wanted to discuss,
Wow.
and thank you so much.
Mark, quick question, just out of curiosity. Do you know what the average size of an SBA loan is
Yeah.
locally here?
Jonathan, if this was the school of SBA, I'd give you an A+. Jonathan, we track that. In years past, Jonathan, I've been here going on 15 years, it was slowly creeping up. And so it was reaching upwards of 700 to 750,000 average loan size. We wanted to get that lower so that we're touching all markets. Currently, Jonathan, 2024 year to date, average loan size for an SBA loan guarantee is 650,000.
Thanks.
Yes.
Good question. Yes, sir.
I
How
just
about,
want-
would you, introduce yourself, please?
Yes, Oscar Taylor, Bonfire Restaurants, 21 years in Houston. Question, you used a term that I was not familiar with called units. What's that about?
No, and I apologize, your first name again?
Oscar.
Oscar, thank you for being here today, and thank you for, you're in the restaurant industry, correct?
Yes, sir.
Yeah, so Oscar, thank you for being here and thank you for your question. What it is, and this gets back to Bob, Tim treated our office as a business. And
Former SBA director.
Former SBA, Tim Jeffcoat. So we wanted to know our total market, we wanna know our target market, we want our loans to reflect the demographics in Houston. And we track that data. And Oscar, to your point, we track the number of loans. So units is number of loans. We also track dollars. And I will say this also, Tim was more focused on units. And the reason why is every additional loan, we are helping another business. And so I follow that same philosophy. We track both, but I do look at units. What are the number of loans that are being done every month, every quarter, and on an annual basis? And hopefully I've answered your question.
You did.
Yep, thank you.
Jada, so we don't just go straight down the panel, would you go next, introduce yourself again, talk a little bit about SCORE?
Sure, absolutely. Good morning, everyone, and I'm excited to be here. It's a part of the hospitality panel discussion. I don't work in the hospitality arena, but my daughter's in culinary school, so it's in the future. So, and who hasn't worked for McDonald's, right? So I know a little something. But SCORE is here for the success of your business, and we here as Bob indicated, we are the second largest chapter in the United States. And what that means for you is that we have over 140 mentors that can help you with every aspect of your business right here in Houston. And as he also indicated, a lot of individuals, a lot of small businesses don't understand the magnitude of the resources that you have here in Houston. I'm from Ohio, and we don't have anything close to what we have as an ecosystem here. So we at SCORE welcome small businesses, even in the conceptual stage. If you just have the smallest of an idea, we'll help you develop that idea using the resources that we have and connecting you to the resources in the community. We are striving to be number one. So this fiscal year, we're focusing on helping veteran-owned businesses as well as women-owned businesses. That's our focus, and getting them to the extent of leveling up. So for the last year as the president, I have been saying that SCORE is the front door of the business ecosystem because of the availability to just walk in between 10 and 2, Monday through Friday, and without an appointment, and talk to someone about getting your business started, or direct information as it relates to marketing. We have CPAs, we have attorneys, social media individuals that can help you with questions that you have about your business. And we provide mentoring. We don't provide actual hands-on. We don't, some of you know me as a QuickBooks queen. I could talk to you all day about QuickBooks, but I can't fix it for you because of our ethics policy. But I can point you to the resources such as the SPDC, which I provide training through them. And so we facilitate the idea of your business. But this year, our focus is leveling up your business from conception to the next level. And so we're going to connect you to those resources. So that's our goal, to be a facilitator. Our slogan is, your success is our success. So we do this in order to make sure that you're successful.
Is
Yes,
there a
sir.
cost associated with that?
For mentoring, it's absolutely free. However, our workshops, we have free workshops, but we also have workshops that you would want to invest in order to help you to navigate your business. Yes, ma'am.
Linda.
So thanks, Jada, for being here. Linda Toyota, Market Executive for Lift Fund, one of the largest nonprofit micro lenders. I oversee the Houston-Dallas market, and we partner with SBA and with Jada. I wanted to give an example of a business, why a business would go to SCORE.
Yeah.
So we, and Jennifer was involved with that. We had a business 11 years ago that had this idea, and we provided him with a large loan to be able to scale up. He's now franchising his business, but he had no experience doing that. He's got 3 locations, so we have hooked him up with SCORE. So one of the SCORE mentors is a big franchise board. And so he's getting that free advice because he had no idea what he was doing. He already had 3 businesses. So that's the relationship that businesses, and it's free. It's really opened up his mind to see what was going on. He's very grateful for all, and he's part of the HCC Goldman Sachs program as
Yes.
well.
Yes.
So we're all kind of connected in the ecosystem.
Absolutely. As an entrepreneur, especially when Jennifer and Linda and I were talking earlier, it started out as a side hustle, right? And in my mind, I could do this all by myself. And I quickly learned after being in business for 13 years that you cannot. And we are a sounding board, to hear the ridiculousness as well as the innovative ideas that you have, and we allow you to be, it's confidential. And as Linda stated, it is free opportunity. And with the example that she provided, the mentors that we have actually are affiliated with franchise.net. So this is legit official mentoring. This is just not, individuals that have free time as we do, because most of our mentors are retired. But we are onboarding more mentors that are like me, that are hybrid, that are working as well as have time to contribute to the community.
Great question. Can't say enough about SCORE and the caliber of individuals that align with it. They're passionate. They really want to help. And you're getting them at their best, where maybe they've slowed down, but they can't wait to work with companies. And just a plug for Linda, who I've known now for 9 years. Wherever I go, she is there. Wherever you go today, you will see her. Follow her, because she's a person in the know. Okay, Kerwood, we're gonna come to you next. Would you talk about your company and share what it's like to fly to Trinidad every 3 weeks for the last 2 years?
Hi guys, so my name is Kerwin Eskai. I am the owner of K&J Wealth Management Group. I have been in the industry for about 27 years. And yes, I do fly back and forth a lot to Trinidad. My family is there, so it started off as fun, but it's not so much fun anymore. But what I do, I'm a certified financial planner and private wealth advisor. I've been a CFP for over 20 years. And for those who don't know, most financial advisors, there's actually 7% of financial advisors in Texas that are CFPs. So we are a rare breed. Whenever you're thinking about doing anything that's comprehensive, you should be talking to a CFP, because we are trained and we go through a lot of rigorous studying and exams to get that designation. It's one of the things that I'm most proud of. I work with individuals, I work with families, I work with a lot of business owners, and I do financial planning for them based on their needs. So we tailor our advice specifically to the individual or business owners. I don't do any type of capital, raising capital, but what I can do and what I do for a lot of the businesses is basically when they already have established themselves and they're looking to protect their assets, we can come up with strategies on protecting their assets, growing their assets, and at some point, usually the business owner wants to retire, either pass it on to a family member or just sell the business. we come up with strategies, we do valuations, and we come up with a plan to transition from being an owner to a retiree and enjoying life. So we customize the advice based on the individuals. We source the professionals that's needed to help. So in a way, like SCORE, we do a lot of mentoring, but it's not for free. So that's in a nutshell what we do, financial planning.
I'm curious, Kerwin, having kind of been through the process, but when you see business owners trying to grow in terms of finding financing and figuring out how they're gonna grow their business or open a new one or something like that, just your thoughts on where they should be looking for money. Is debt the way to go? Are there other sources, other ways to do it? You know, just from your experiences and seeing what works and what may not work, or what may get them in trouble in trying to raise the money to grow or open a new business.
So that's a really good question. So yes, I think traditionally debt is the way that most people go, but it's not the only way. Debt could be a good thing, but there's a lot of predatory lending out there. Excessive fees and high interest rate can definitely damage and destroy a business, get you out of, actually put you out of business. But there are other ways. So if you manage that the right way, and if it's short term and if the interest rates are low enough where you can afford it and you feel they're not excessive, it can work. But you can also raise money from equity financing. There's crowdfunding, venture capital. There's also angel investors, which is not relatively new. But there's also another strategy that you can use. It's called ROBS. I'm not sure if you guys have ever heard of it. It's Rollover on Business Startup. It's a program where you can actually use your retirement assets, transfer it tax-free into a self-directed 401k, and use those funds. Basically, you must have a C corporation. The C corporation basically sells stock in the business to the 401k, and the 401k releases the funds to the company, and you can use as capital.
That's like self-funding, essentially.
It's self-funded, so there's no interest. You don't have to go through a lot of documentation to get the loan. I will say that there are requirements by IRS to be able to do that, to be compliant. Only certain CPAs actually knows how to do something like this. So whenever you look into do a strategy like this, you definitely want to align yourself with someone who knows what to do, and also maybe have a financial advisor like me to help you through the process. But yes, and those are the ways that you can actually raise capital and grow your business.
Thank you. Jennifer, would you be next?
Sure.
Tell us your life story, start at birth. Go from there.
So first of all, can you guys hear me okay?
Yes.
All right, and I want to echo all the gratitude that's been expressed for being able to be here today, for everyone who has made a point of coming today. So I'm here representing Lich Fund. Lich Fund is a nonprofit community development financial institution. And for those of you who haven't heard or aren't familiar with the history of what that is, community development financial institutions were created about 30 years ago through funding from the government specifically to counteract the effects of what were later deemed to be illegal lending practices that were very discriminatory against certain populations. And so to counteract the effects of policies like redlining that didn't allow lending into certain communities. And so the CDFI industry came about from that place. And so our purpose, our entire mission, is to provide capital to individuals who don't have access to capital from traditional sources. And there is a part of that works with underserved communities. There's also a part of that has to do just with what may have an appetite for lending for. So when you are in what has traditionally been considered a high-risk industry, like perhaps the restaurant industry, then we can be a source of capital that is still healthy and keeps you protected from those kinds of predatory lenders that you might find in the marketplace. So that's a little bit about the fund. We work a lot with SBA programs. We also work a lot with a lot of the community partners to make sure that people are plugged into an ecosystem. We have a 30-year track record
of successful lending, which means we have a 96% repayment rate, despite the fact that we are working with individuals who may have a more challenged credit score or be in a higher risk industry or not have the generational experience with lending that other communities have. We've also lent out almost more than $1 billion in capital in our 30 years, which when you consider that our average loan size is about $40,000, is a lot of people who have been impacted by our lending. There was a study that was done on Lynch Fund a couple of years ago that says that for every dollar that we loan out, there's actually a 14-fold economic impact into the community. So every dollar that we lend into a community creates $14 worth of economic activity because it's a job, it's a salary that was then used to purchase goods, it was an investment into equipment, it was tax dollars that were paid to the government, that were services, turned into services that were provided. And so that 14-fold impact into the community is really what Lynch Fund is all about. And of course, the stories about being able to help an individual entrepreneur, but I could tell stories all day long, so I'll end it there. I've been at Lift Fund for 13 years, and I am very passionate about what we do because I've always worked in small business. I've run my own small businesses. I currently run a small business as well, so I understand the challenges that entrepreneurs face, and I'm very passionate about helping people break through any cycle that might be limiting them through entrepreneurship. I truly believe, as Lynch Fund does, that entrepreneurship is a path forward to a community of shared success, and so that's what it's all about.
Awesome, thank you. Okay, so Jonathan asked a really good question, and one unsurprisingly. I'm gonna tweak it a little bit, and I'm also gonna ask our audience if you have questions to chime right in, and that would be this. In your experience, and this is a question for each one of you, when do businesses connect with you? When should they? So what is common, how they come to you, but what really should they do? And I would ask that question with the sort of thought that they may not know, one, what you do and how you do it, but two, there's just a lot of questions out there, especially about lending, and that can be awkward if someone doesn't have the experience. So what do these businesses do now, and what should they do? When should they be connecting with you? You want to take that one
I'll
first?
take it
Right.
first, sure. So I think that there's a lot of ways to answer the question, but one of the things that we do that is a particular niche of ours is that we work with startup companies. And so we are known for that, and a lot of people do come to us when they are in that startup space. And I would say that if there is a should that could be added to that, it is once you have really thought through the business plan, once you've been to SCORE and you have a really strong idea, it's more than just a kind of nebulous idea in your head. You've really thought through, where am I gonna open up? How am I gonna do this business? You've saved up your equity investment into the business as well. So having that, being at that moment. Aside from that, on the flip side, I would say there are occasions when companies come to us because they're in trouble. And I don't want to imply that we can't help a company that's in trouble, because we certainly can. However, it is important to realize and to be planning and to be reviewing your financials and to be detecting those signs of trouble really early on, because the best time to come and get a loan is when you have a growth opportunity, and not when you need when you're no longer able to even manage the current expenses of the company. Because if you're at that point, then proving the ability to take on another obligation, first of all, it wouldn't be responsible of me as a lender to give you another obligation if you're at that point. But, and so it would look more like connecting you with other resources in the area. So it's not that we can't help businesses that are in trouble, but it is important to remember the need to be in that place, to recognize that place early on,
so that we can still have an opportunity to look at how we can leverage the opportunity for growth.
Great advice. Great advice. Who wants to try that? Carl, how about you? When do you connect with businesses and you sometimes say, only will you started sooner? When do they come to you? When should they come to you?
I would say we get at different stages. The ideal time to come to someone like myself is probably when you're looking to scale and grow. So that sweet spot, maybe 2 or 3 years after the business is already established, kind of a predictable cash flow, positive cash flow. You're looking to maybe go into new markets, add new products. At this point in time, when you have that potential to grow, that's probably the best time to come and see someone like myself, because my team and I, we do have an advanced planning team, which is comprised of myself, a CPA, a couple of attorneys, and we can actually sit down with the business owner and come up with a plan in terms of how to best do this. And we can source all types of professionals, coaches, business consultants, you name it. So I would say that's the best time to really get with us.
Yeah, Linda.
Well, I have a question. You have mentioned, because you talk to businesses about retirement,
Yes.
right? So there are those businesses, many family businesses, right? They're not sure who's gonna take the business over, they might not do that, they might just decide, I'm gonna just let it go and just sell. How do people, part of it is the awareness that said, okay, I don't know what to do with my assets, right? And so when I think about retirement or getting rid of a business, how do they find out about you? Because there are businesses that are looking, many of them are, they're in their 50s and they don't wanna continue the business, but they don't know what to do with the asset, right? And so you can just say, I'm just gonna sell it outright. But are there other things that they could be thinking about from a retirement side? That don't
Well,
have family members that wanna take on, because it's a big part of the Houston community.
most people find me through referrals. We operate more or less a 80 to 90% referral basis. I do some networking. Being part of HHA is part of that. I'm also part of the Great Houston Partnership. I'm doing a little bit more networking now than I ever did before, and that's because I've reached a point in my life where I'm very comfortable in my own skin, and I'm actually kind of venturing outside my comfort zone. But we do a lot of referral type business. In terms of how should a business owner be thinking? Well, I think that really comes down to the business owner. Everybody is different. It all depends on how they want to see their legacy. I have business owner clients who they want to pass this on to the next generation. In fact, I have some clients right now in Florida, very, very successful for almost 30 years, and their 2 sons and daughters in the business, and they pass in, and we're actually coming up with a plan right now to transition the business over 3 years. And there are different ways you can do that. Don't have the time to get into all the details right now, but there are different parts and different strategies you can utilize. Depends on what the business owner wants, how much capital they want, how much assets, if they want some of it sheltered, and of course we work with different professionals. So I know that doesn't really answer your question, but it really comes down to the business owner. And the only way that we can really identify is to have a conversation, because every business owner is different, I guarantee you. You're gonna have a different, some people, they don't even care. They might have kids, they might say, okay, well, if he wants it, I don't mind, but at the end of the day, they just wanna get out at a certain age. They expect maybe 2 million, 3 million, whatever the amount is. They want that to be in their account by this date, and they don't care if they have to sell it or transition, but that's their ultimate goal. So it really depends on.
So I know, because we don't have any bankers here, but banks do a lot of wealth management, right?
Yeah.
This is a strategy, and so I know Mark has many banks that are SBA lenders, the fund is a lender, we work with banks. So is it about the relationship? Because you can go to a bank that has wealth management, and they're gonna do the same thing. We're gonna say, look at your assets. The differentiator, right? It's all about the relationship, how people are comfortable. I just wanted to mention that, because we're seeing more wealth management strategies from all the banks.
Definitely, you can go to a bank and they can pull the resources to help the business owner or individuals. But I would say most people tend to go to like private wealth advisors, CFPs. I think they would have a little bit more experience in terms of handling situations like this. So that's been my experience.
Because we in the audience are all resources and ambassadors
Yeah.
for businesses. So it's important for us to know all this information, so thank you.
Okay, Jada, same question to you. When do people come and see SCORE? When should they?
Compared to our partners in the ecosystem, there really is no exact point. There's absolutely really no barrier to entry. Most of our partners, you have to fill out an application, wait a period of time to speak to an advisor, whereas like I mentioned before, you can walk in anytime between 10 and 2 to speak with someone on any level of your business. And in addition to that, because we're a national organization, if we can't answer your question, we can't provide you with a resource, which would be hard pressed, we can reach out to our other chapters throughout the nation in order to provide you and connect you with an individual that can speak to you specifically. I always give the example of there's an idea that is growing in Colorado that you want to bring here to Houston and develop that business. We can connect you with a mentor through webinar, through workshop, resources, and help you develop that information. We do a lot of co-mentoring. So, for example, as president, I can't take on mentoring fully anymore. It's just a lot. So instead, I'm pulled in as a subject matter expert, and that's what we can do for you. Another misconception is individuals think that they only can have one mentor. You can have as many mentors as you need for every level of your business as well as every aspect of it. So within mine, I have a marketing, because marketing is not my bag. So I have a marketing mentor. I have an individual that I speak to about strategic planning. So there's different entry points. It's your comfort level that's important.
Thank you. Mark,
No, thank you.
when do people come and see you?
And I want to let you know, I'm not texting someone, I'm taking notes. I've been taking notes this whole time. Bob, I first wanted to address the comment about predatory lending. Want to share with the audience that one of the things that I share with clients is credit elsewhere. If you can get better terms than SBA, do it. But if you can't get better terms, SBA is there for you. And that we're startup friendly. We offer competitive terms. The why of SBA is the guarantee itself. Bob, we have 50% guarantee, 75% guarantee, 85% guarantee, 90% guarantee. Bob, we offer financing for startup costs, for inventory, for build out, for refinance, for acquisition, and you can utilize one loan for all of that. And as far as when, Bob, I'll address that too. What the comment that I want to make, Bob, is like SCORE, this is really part of SCORE's mantra. We are with you for the life of your business. Whether you're a startup and you need 500, or whether you're an existing business and you're expanding and you need $13,750,000, and oh, by the way, Lit Fund can offer that financing for you. I also wanted to make the comment, Bob, that you don't come to SBA for a loan. You go to an SBA lender, and there are 130 lenders here in Houston. There are over 4,000 lenders nationwide. Also, Bob, the other comment that I'll make about when, and that is before going to a lender, go to an SBA resource partner such as SCORE, and that these resource partners, Bob, can help you with the why of your business, the competitive advantage of the business. Bob, and I know I'm preaching to the choir to you, and more than likely to the audience as well. In an MBA school, the 4 Ps, price, product, place, and promotion. And so our partners, including SCORE, SBDC, Women's Business Center, and for veterans, VBOC, they can assist you and guide you through the why and through those 4 Ps and through the pricing and through the financing. And I'll stop there.
I know you could go on.
Can I just add I just want to add something quickly, something he said, but what I mentioned earlier with the RUBS strategy, which is the rollover on business startup utilizing your retirement assets. I've seen clients actually use some of their 401k to secure a SBA loan as a down payment. So instead of taking, let's say they need 500,000 from their retirement, they take out like 50,000, they use it as the down payment and they get approved for the SBA loan as a deposit. So they can use a combo project, situation like that, so.
It's all about leveraging what you have to
Right.
get to where you need, right?
Exactly, so just wanted to point that out.
Guys, we're approaching 10 minutes. Would love to get questions from you guys. Who's got something simmering they want to ask any of our panelists? Yes, sir?
It's not really simmering, but thank you for having the ball head. I think that's really all.
Great question.
I think we have to understand, and we do, this is as an alliance, as an association, we have to understand who our core audience is. So from a restaurant standpoint, the independent restaurant operator out there doesn't really have any access to capital. They've got 3 cents left over at the end of the month, and when they have that, they think it's a success because they're keeping the doors open, right? And I think the same thing for the hoteliers out there, those franchise hoteliers, they're the same business as well. But what I think I'm seeing here is that it's a financial glide path that we can offer to our members, which is, as you were suggesting, and thank you to everyone on the panel, but those independent operators, those hoteliers, don't really know when and where to ask for the money or financing, right? Or just access to capital. So as an organization, we can help them do that and say, here's where you start. Because many of them, entrepreneurs, small business people, they get started and say, well, there's no way I'm going to get the capital here because number one, I don't make enough money. Number one, my credit score is wherever my credit score is, and I'm just going to have to make more revenue. Well, how do you make more revenue?
That's great if you can do it.
Yeah, that's great if you can do it, right?
But if it needs an investment, then you may,
Then there is a
you
trouble.
leverage
And the
that.
last statement there, based on all of that, is that almost every morning, whether it's Culture Map or any place else, we see restaurant groups that are closing down. They're blaming Barrel or the derecho or whatever. What that tells us is that underlying that, you really didn't have a good
Plan.
business structure,
Yeah.
right? A storm should never knock you out. We get it. But the industry that we support needs all of this help, and I think we need to start putting a glide path together for them so they know exactly when they need to engage and how they can engage, and that there's absolutely opportunities for them to get funding.
I think that, what everyone has indicated, and I think what they will do is send them to us. Because we can at least have that conversation with them and just to explore opportunities. Within my wheelhouse, my first thing is, okay, we need to add to your service line of some sort to have that leverage that you need, and then what's that 3-5 year plan in order to get this to the next level. Then we send them down the line here, so that they can actually put it in action. But, just having that very candid conversation is what we can offer to them and help them to understand next steps.
And then Kerwin and I have been friends for 12 years, so it's gonna sound like I'm trying to give him some business here, but the end game is, once we get through this line, one day we want you to be able to talk to K&J management and say, you know what, I got this money, man.
Right.
What do I do with it?
Talk to me, man. Talk
I
to
think-
me.
Right? So, this is awesome because I think it gives all of us in the room, especially as board members, a track. We're connectors at the end of the day, right? It gives us a track to talk to our membership about that says, hey, we can help you along this path.
I just want to interject, and you bring up a good point about the 4 cents, and you can rub those 4 cents in your hand. That's the time they need to come see us. They need to utilize our partners to look at what is my monthly, quarterly, and annual revenues. What is my turnover rate for each table? How many tables do I have? What is the turnover rate? What is my sales per square foot? What is my cost of goods sold? What are my expenses? How can I adjust my expenses? How can I adjust my cost of goods sold? And how can I improve my bottom line? And, we take our cars in for a tune-up. We need to take our businesses in for a financial tune-up. And it is then that they need to come see us, and it is then that they need to start working with our partners to analyze every aspect, and not only analyze the financial statements, but also the cash flow. So I'll just make that comment.
Mark, hold on. Have you owned a restaurant? It's conversations I have every day.
I just want to say,
PDS.
quick point. So one of the things that I've noticed over the years is that people always look for capital when they, of course, when they need it, right? But usually when they need it, is their situation is so bad that they can't get the funding. So we always advise clients, you always want to have, like, especially if you're running a business, have a business line of credit. You always, the best time to apply for finance is when you don't need it. Because when you don't need it and when things are great is when you get the best terms, you get everything that you want because the banks want to extend that credit to you. And that comes in handy because you never know, especially as a restaurant owner, because I'm sure if some of them had a business line of credit for maybe 100,000 or 50,000, some of them probably would not have gone out of business. So just contingencies.
Absolutely. If I could just say, for any business, I mean, but especially for those that have a really minimal, profit margin, it is all the more important to leverage every opportunity that you have to make use of the overhead that you have to generate as much as you can. And so it sounds like, there's a little bit of, there's always risk with starting something new. But you're absolutely right to say that when you have those 4 pennies is exactly when you should be saying, how do I leverage these 4 pennies to turn it into 6 next time, to turn it into a whole dime after that, and then have 2 dimes to run together, to rub together. But the challenge with doing that is kind of that mentality of, I know I'm in a high risk industry, and so I know that there's nothing out there for me. I'm gonna have to do everything myself. And the panel, one of the main themes that I just wanna make sure that is, clearly enunciated is that there are so many resources. There are so many resources and so many things that, so many people who are willing to walk with the small business owners on that path. And it's, and one of the challenges that I would say that we probably all face is just people knowing about what is out there and how we can help.
Yes, sir. So I know we're about to wrap up. Oscar's got one more question, but I wanted to make one quick thought. I was gonna ask it as a question, but I won't because we're running out of time. But I wanted to make sure everybody was aware, and I know you guys have such great resources and things that are out there, but we've had a really, really difficult summer with all kinds of challenges and disruptions and things like that. And we are doing everything we can to publicize the fact that you all have resources, disaster funding, things that come in handy, literally, after all of these things seemingly continue to happen to us in this town. So as long as everybody's aware, but we will always make that information available as much as possible because as Brian was alluding to, I mean, there are times where if you don't have that business line of credit that Kerr was talking about, there are times when something is gonna happen and you need that emergency funding, and I know you guys make that available, particularly the fund and SBA, and we are doing everything we can to publicize that and put that out there and keep that communication going. So I'm gonna let Oscar ask his question.
Okay. Oscar Taylor, Bonfire Restaurants. As I mentioned, we're in our 22nd year in Houston, 2 locations in Houston. Keep that in mind, 2 locations. I was selected to be a franchisee of another brand, and I would have been number 66 22 years ago. That brand now has 2,800 locations. I have 2. I did not do the franchise, right? Couldn't be happier because I own the business 100%, my wife and I, right? We do great. We are not the restaurant that counts 4 pennies at the end of the month. That is a misnomer among many restaurateurs that I visit with. We have never had a losing quarter in 22 years. We have never had a losing year in 22 years.
Congratulations.
right here in Houston. But we're not downtown, as I was sharing with this young lady. We're on the east side of Houston. Most people think of Channelview, and we're on the north side, just south of Greenspoint. So a lot of people think of that. We're in the school districts very heavily. My questions, and there's two questions, and I really need some real guidance. If you handcuff me and take me with you, that would probably be the best outcome for this, because I need to know. How are these organizations with like products, go to 2,800, and another one, I won't mention names, has now 312. We closed one of those franchises that came in our neighborhood. They couldn't compete with our product, but I have two. I don't understand. I have talked to dozens of people in your type roles, blue suit people, and they are saying, or gray, but this isn't a moan and crone thing, and I do have a master's in economics, so I do know a little bit about money. How do they scale and grow without physically giving away their businesses? And somebody said, subject matter expert, I need to know, are there case studies that I can literally read to understand how people go from 2 to 200? That's what we're trying to do today. We've been selected by a developer to open a location right outside of DC, 1 mile outside of DC limits. We've been selected by the same developer to open one in Kansas City. And I'm saying, my study that we have paid for shows I can open 58 in Houston and never step on my own toes. I don't feel the love that I'm hearing as a person that's been talking to blue and gray suits, and my bank is Chase. 22 years with Chase. I am a premier status bank client of theirs, and here's just enough to fail. Mr. Taylor, absolutely, we know what you do. And I look at the number, I'm like, that's just enough to fail. So I need to understand how these brands grow from 2 to 200 to 2,000 without giving away the business or, totally failing. That's not an option.
Who wants to tackle that one?
And I
I'm
gotta
wearing, this is an off black, it's not blue or gray.
That sounds like something for Jada.
It's really been painful.
Scaling question.
It's really been painful.
I've got some comments. First it applies to Jada. What it is, and it gets back to SCORE, not only do they have 130 advisors, 140 advisors, we have 13,000 nationwide. And so I'll have a client in Phoenix that I connect with a SCORE advisor in Jacksonville, Florida. And the example that I give is the gentleman, alcoholic beverages, and he wants to scale. He's in 7 states, and he wants to know, how can I grow my business even further? Well, I connected him to a SCORE advisor in Jacksonville who used to be in charge of marketing for Bacardi for North America. And so part of that scaling is connecting with advisors who have that knowledge base about scaling, and in this case, the restaurant industry. And Oscar, I know I'm preaching to the choir. 22 years in the Navy, we would say bravo Zulu, job well done. You could probably be part of that conversation, but number one, it'd be connecting with a SCORE advisor, and if it means going national, connecting with an advisor in the restaurant industry who has scaled 150, 200 restaurants. That's number one. Number two, it's cash flow, and I get it regarding financial statements and being a long-term an account with a local lender. But I would analyze the cash flow. Part of it also is a growth plan. SBA, we have a program called Thrive. And Thrive has been around for a long time, at least 20 years. It used to be called Emerging Leaders. It's now called Thrive. And you work over 8 months, over 13 modules, and you work on a growth plan for growing your business. The third comment that I'll make, Oscar, is that Kerwin made a good point about equity investment. Want to let you know that SBA has over 300 venture capitalists across the country, and they do equity investment. So it may be, just maybe, that utilizing one of the SBA's SBIC's, small business investment companies, that can do debt, that can do equity, and can do a combination of debt and equity. And we have SBICs right here in Houston. One of them is Main Street Capital. Now, with equity and with SBA's Main Street Capital, they have a certain minimum threshold. A Main Street Capital is 5 million. But it may be having a conversation with one of our SBICs saying, I've been in business for 22 years, and just like you said, just like you shared with me, never had a quarter loss, always been profitable, and I see opportunities. So it may be having a conversation with an SBA, SBIC, where you're needing more than 5 million. We have debt financing to 5 million, but maybe it's a conversation going beyond 5 million.
And I'm just gonna say one more thing from the point of view of a lender. My area of expertise is not the how do I do this, but to the comment that you made about a lender, remember that, yes, there is tremendous value in relationship banking, but your bank is a service provider. And and every bank, every lender has a different appetite, every lender has a different risk threshold. And if you have a powerful idea and a powerful track record, you should be shopping that around. And the second thing that I'll say to that is, if you have a good sense of your numbers and you know this is just enough to fail, that needs to be, remember that this is it's a conversation that you're having with your lender, right? And if what you're saying is not clear to them, then I would revisit how it is that you're presenting it, right? And show them the numbers of, show them the numbers, and if you can be your own best advocate. If they're still not interested, then present it to somebody else, because just from the way that you are conveying yourself, I would say that, it comes across that you have an understanding of what would be enough to truly make this successful. So that needs to, remember that it's a conversation. Remember that they're offering X, you can go back and say, X is not gonna cut it. So I really need what I asked for, or I can actually shop this around and look at different banks that have different thresholds for the amount of risk because there is risk, but for the amount of risk that you're looking at, right?
And just one more comment. I worked with clients, and I worked with clients who were existing clients, and I had clients that I worked with that we did projections into the future. And so part of that is having a pro forma. Pro forma is just a fancy term for a budget, but it's a budget that incorporates your current financials and also projecting, once you have that capital, where am I going to be 1 year out, 3 years out, 5 years out? So to Jennifer's point, it's having a conversation, but it's also being prepared and having items such as projections and cash flow analysis that says, if I need $7.5 million, how am I going to use that? And what is my position going to be 1 year out, 3 years out, and 5 years out? How I'm going to grow the business utilizing those funds? Yeah.
Well, thank you all for that. I know we could probably go on for another hour, and it's all very important and it's all very helpful. So I would like to first thank all of y'all for being here this morning, and then let's thank our panelists. This is a serious brain trust up here with incredible experience and great resources, and we really, really do appreciate y'all taking the time to come out this morning and to share that information, share those thoughts, make yourselves available, and we will make sure that everybody knows how to reach you so they can avail themselves of your services and your expertise, going forward. And special thanks to Mr. Bob Charlet for leading our discussion this morning. Very much appreciated. So thank you again.